All right, everyone. For today, we're going to look at Grab stock. This one's kind of been on my mind for a while. It's a foreign company. I think it's incorporated in Indonesia. Don't know for sure on that. I had heard recently about someone that had visited in that area and that this company was everywhere. And I think this is also like a retail favorite. In the past, I haven't done it because it's kind of hard to. Their reporting is a little different from what I'm used to seeing. You can still see it, but it's kind of broken up into lots of different segments of their business. But we'll kind of start with the valuation instead, and then look at the latest earnings. And we'll also see what it is. From what I understand, this is basically like or Uber, or what's the other one? You can tell how much I use this. There's Uber, and then there's another one here in the United States that a lot of people use. And this is kind of like their equivalent. It looks like they're in Cambodia, Indonesia, Malaysia, kind of Southeast Asia area, Thailand, Vietnam. So interesting. If we look at the valuation, you're looking at a market cap of almost 17 billion, which is a lot. That's pretty high, but maybe it's justified because we haven't looked at the earnings. But we'll also look at the shares outstanding. You're looking at 4 billion shares outstanding. The higher the number that is, the more difficult it is for volume to move the stock. So usually the lower the number this is, the better. But that doesn't mean that it can't still move. It's just something to be aware of. Looks like the trailing 12 months PE ratio is 64. We'll double check that and look at that. And if we just check their financials, you can see pretty steady revenue growth. Massive revenue growth from 2022 to 2023, still growing. That's really impressive. And it looks like the COGS, respectively, has not grown as much as the revenue has. In 2025, it looks like it grew 17% as compared to 20%. But years before that, the COGS was lagging, which is great. Let's see. Gross profit is also getting better. Which reflects the reduced COGS when compared to the increased revenue. So that's great. This is actually really interesting. Look at this. The operating expenses have basically remained flat. That's good. That's really good. Which has then allowed them to get a positive operating income in 2025. So, basically what that tells me is if they continue to grow, they're just going to start making more and more money. So that's really interesting. So when you buy this stock, you're really buying the growth story, because this valuation is very high. But if they continue to grow the way that they are, with their operating costs being flat like that, and their COGS is rising slower than their revenue is, this is a growth story. So that's interesting. If we look at the latest earnings for December 31st, we can kind of get more into detail over that. See the revenue growth, cost of revenue. This is what's impressive, is right here. Their sales and marketing expense basically didn't increase at all when compared to their revenue. So that's great, because every once in a while we'll see those companies. The one that this makes me think of is Wish.com, where they would spend massive amounts of sales and marketing to get growing revenue, but they were spending way more on sales and marketing. They're spending way more dollars. They're spending more dollars on sales to get a dollar of revenue. So they're just losing money. Whereas here you can see their sales expenses has been basically the same and their revenue is still growing. So that's organic growth, really good. And look at this, G&A went down year over year. That's great. research and development stayed flat. So yeah, that's what really impresses me so far the most about this company is those operating expenses. They keep them flat. That's really interesting. Um, let's see. And then I'm not gonna get too into the weeds in this. So there's that. So let's check a few other things I like to see. Ooh, let me see if I can see how much cash they have on hand. Non-current assets. Where's the cash? Oh, they have this backwards. This is weird. Look at this. They have the non-current at the top and current after. That's interesting. But all right, so here's their cash, and this is in. Is this in millions? Yes, in millions. So they got 3 billion. Yeah, I think 3 billion of cash, which is a very strong cash position. Do they have any debt? Not really. Take that back. They do have some debt. So debt is about half of their cash position. But look at this. They got these other investments. They got a ton of money in other investments. So very healthy balance sheet. Let's just make sure that this is confirming that. Yeah, it is. So it doesn't have it broken down. It looks like this long-term debt, they're using a different number than what I saw here, which I probably just misunderstood something. Yeah, loans and borrowings right here. That seems like that's quite a bit. But either way, it looks like this is not including that in the long-term debt here. Oh, no, it is. It's just MSN's being weird. Here it is. The current liabilities are 4.63 billion. So yeah, strong balance sheet. More than enough to cover their debt. So that's great. Okay, so let's look at a couple other things. That was the valuation and latest earnings. I want to see now, are insiders buying Grab stock? Fintel shows this too, but I like to use ChatGPT. Okay, so CEO sold. Several insider sells. This is something to watch out for, this heavy stock-based compensation, because that is dilution. So I'm going to see real quick, have the out. And that's why when we looked at the very beginning of this video, the total outstanding shares of Grab was at like 4 billion or something. Yeah, 4 billion. And it's probably from this stock-based compensation. The outstanding shares of Grab stock increased over the past 3 years. Okay. Pace is moderate. So, that's not bad at all. 3.9 billion, 4 billion, 4.2. Could be way worse. So that's not terrible. Not like ideal, but that's not terrible or a game changer. But there's insiders that aren't buying it. And then let me see. I want to see, have institutions been buying? Okay. 55% ownership, which is great. And then mixed trends on the institutions. Okay. I think that's the main things that I want to look at. There might be, I should ask this, are there any coming catalysts for Grab stock in 2026. Looking for like permits or something like that in other countries. First full year profit, which we saw. Scaling profitability and EBITDA growth, which we saw. Potential re-rating. They did a stock repurchase program and they have plenty of cash to do that. Offsets the dilution. Acquiring Food Panda Taiwan. We're having sentiment swings. Okay, so there's a few things, but nothing like super crazy to watch for. So I think this one's interesting. And I definitely think it's showing some strength here. We're above the 50-day moving average and below the 200 still. I think this one's interesting. I think the most interesting thing about this company is that their operating costs have stayed flat while their revenue has continued to grow and the COGS have not grown as quickly as the revenue. So that tells me that if this company keeps growing, they're going to start making a lot of money. And I think that's interesting. The other things to kind of keep in mind are going to be like, this market cap of 16, 17 billion. That's a pretty big premium for Grab. And then the shares outstanding is pretty high. But overall, I think very interesting company. This is kind of my first real look at it. So let me know what I'm missing or what else I could learn about it. I love learning about these companies. So yeah, just let me know. So, all right, I will see you guys in the next